Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Geopolitics are moving markets across the board, but let's take a look at the economic calendar and how it's affecting the FX. Going back to Friday, ISM manufacturing missed for the fifth month in a row. In fact, it was the worst contraction for the fifth month in a row. So that started to put the dollar a little lower. Remember, the dollar started off stronger on the year, but now the dollar is falling back. And what we're seeing here is a very shallow fade. The euro, on the flip side, however, the euro did check the 50-day moving average on Friday before reversing. And right before that ISM manufacturing number missed, supporting the euro and weakening the dollar. Heading into tomorrow, we look at Eurozone CPI and retail sales early at 4 a.m. Central Time. And then we also have trade balance data from both the U.S. and Canada at 7:30 a.m. Central Time. Factory orders at 9, and the big ISM non-manufacturing at 9 as well. So that ISM non-manufacturing as well as factory orders are really going to emphasize what the dollar and the euro do tomorrow and how they set up for the rest of the week, and as we look at non-farm payroll on Friday. So again, a big week for the data. What we're seeing here, though, if that ISM number misses, we could see some continued weakness in the dollar. And the real next big level of support in the dollar index is coming in at 95. For the euro, if we really get a breakout from this long-term consolidation pocket, then we could see a move up to about 114. So keep that in mind. But again, if we get back below Friday's low in the euro or back above Friday's high in the dollar, we're going to see a continued move. So those are your ranges to look at. Some other trades on our radars. We mentioned the Aussie dollar last week, and we said that the Aussie dollar could be susceptible to selling down to 68.80. So 68.80 could be in the cards. However, we are seeing some support. 69.40 hitting the 50-day moving average up there and above a previous shelf. So those are two levels. Look at the Aussie. We would like to find an opportunity to buy the Aussie, but we want to be more patient looking down to 68.80. As well, the Swiss franc. We've loved the Swiss franc here, and that did come in and check support very, very well. 103, you got some strong support down there, and the Swiss recovered today, as it is a little bit of a safe haven, and amidst that weaker dollar, the Swiss is setting up for continued strength. And then lastly, the Canadian dollar. We do have some data coming out of Canada tomorrow, the IVPMI at about 9 o'clock a.m. Central Time, I believe, and then the Canadian dollar setting up with a bull flag. Check that out. If that IVPMI number beats, we're seeing crude oil strength that has also supported the Canadian dollar over the past couple sessions. If crude oil stays above 61, 62 bucks, that's going to leave a path of least resistance if the Canadian data beats. So we'll look for the Canadian dollar to break out above a bull flag that's developing right now. Give us a call. We're here to help with anything on the board. 312-278-0500. Remember, futures trading involves substantial risk of loss. Is not suitable for all investors. Thanks a lot.